So crypto investors have registered 1.5 billion XRP to receive Flare's smart contract tokens. Have any of you guys also went ahead and registered your XRP to receive Flare tokens? Let me know in the comments below. We're also going to go over a couple of other things. We have California governor signs law bringing the state new tools to regulate crypto. We also have Grayscale adds 186 million of Bitcoin to its reserves. Grayscale, guys, now owns 2.5% of the entire Bitcoin supply. I know, try to swallow that one. And then we'll finish up with the Bitcoin difficulty ribbon chart. Hasn't been this bullish since March. So I'm gonna hop right into this. Make sure you guys drop this video a like for me so we help push it out to more people. And with that said, let's get into it. So Ripple-backed Flare networks continue to witness a big response as crypto investors line up and register 1.5 billion XRP. XRP holders have set up over 24,000 accounts with a total balance of 1.5 billion in an effort to get their hands on the Flare's governance token Spark. Now remember, they're matching it, so they say 1-to-1. So if you have, let's say, 20,000 XRP, in theory, you should be getting 20,000 Spark tokens. So according to the Ripple partner, crypto investors who register their XRP in an eligible account will receive free Spark tokens in the 1-to-1 ratio when the blockchain company holds the snapshot day on December 12th. Recipients will retain ownership of their XRP holdings while receiving the new tokens. Flare is expanding the use case of the fourth largest crypto by allowing users to run smart contracts on XRP. More than just a governance token, users can also leverage Spark as collateral to redeem assets in Flare's ecosystem. 4 major exchanges have already announced their support. So if you guys would like to register your XRP so that on the snapshot date you could be getting your Flare tokens or your Spark tokens. These are the 4 exchanges that are currently open. It's Uphold, GateHub, Anchor USD, and Bitrue. So if you're on any of those 4 exchanges so far, that is where you could go ahead and put your XRP on so that you can have that 1-to-1 Flare Spark ratio. So meanwhile, those who self-custody or store their XRP in a non-participating exchange can still snag Spark. In a Coil post, XRPL Labs founder Weiss Wynn says that XRP ledger account holders must have a private and key account for Flare. Wynn notes that all account holders should prove ownership to be eligible. They go on to say XRP ledger account holders will prove account ownership by signing a reference pointing at their account on the Flare network. This reference will be stored in a message key field on the account level on the XRP ledger. This means your account address on the XRP ledger will point at your own 0x account on the Flare network. Flare will read all XRP ledger accounts pointing at Flare network accounts, check their balance, and distribute an equal amount of Spark tokens to the Flare network account pointed at in the XRP ledger account. So basically making it a 1-to-1. So whatever amount of XRP you have is the amount of Spark tokens that you should receive. So interesting stuff, guys. Let me know what you think of this. I know there's a lot of people with mixed feelings on this, whether or not it's smart to do, whether or not they're trying to see who exactly owns XRP, but for the most part, I'm pretty sure they already know who owns XRP. This would help solidify that because, again, you're proving your ownership of it. But let me know your guys' thoughts in the comments below. What do you guys think of all this? Are you guys going to go ahead and get these free Spark tokens, or would you rather just buy them at a later time? I'm sure they can't be that expensive when they first come out, but who knows? I mean, there could be some hype or FOMO behind it, or we've seen so many crazy things in the crypto industry. Nothing is off the table for me, at least. Now, let's move on. California governor signs law bringing state new tools to regulate crypto. If you're enjoying the video so far, make sure you drop it a like, and let's go on. So California Governor Gavin Newsom signed a bill into state law on Friday that will see the California Department of Business Oversight renamed as the Department of Financial Protection and Innovation. This will go into effect on January 1st of 2021. The changes will equip the regulator with, quote, new tools to shape the regulation of virtual currency. So we're seeing it, guys. We're seeing regulation coming in. We've been seeing it. It's just more and more confirmations now. The new Cali Consumer Financial Protection Law will, among other things, provide the department with greater enforcement powers designed to protect protect Californians from quote pandemic related scams. The move means the department will have new regulatory authority to begin cracking down on deceptive or abusive practices undertaken by unlicensed financial services or products. So that's good, guys. There are definitely a lot of scams. I've seen so many people using the pandemic as a way to, try to get people into scams, taking advantage of people in bad situations. And that's definitely not cool. So the new law will also see the creation of an Office of Financial Technology Innovation designed to engage with new industries and consumer advocates to encourage consumer-friendly innovation and job creation within the state. A new division of consumer financial protection will be created to monitor markets with a research arm that will keep up with emerging financial products such as cryptocurrencies, and 90 additional employees will be added to the government payroll, representing a 13% increase in staffing. So mainly they want to observe, monitor cryptocurrencies, regulate them, and also help stop the scam. So we are seeing them moving forward. We're seeing kind of a lot of countries moving forward with cryptocurrency adoption, regulation, virtual currencies, digital payments, everything like that. Now, Grayscale adds $186 million worth of Bitcoin to its reserves. Let's go on. Over the past week, digital asset management firm Grayscale Investments has increased its reserves by 17,100 Bitcoin. It's an increase of $186.5 million measured in US dollars. As a result, the GBTC Bitcoin Trust, which is Grayscale's Bitcoin Trust, was created in 2013, now amounts to nearly 450,000 Bitcoin. It's worth about 4.7 billion, and this corresponds to 2.5% of the amount of Bitcoin in circulation. That is crazy, guys. So Grayscale owns 450,000 Bitcoin, and that 450,000 Bitcoin is representative of 2.5% of the entire Bitcoin amount of Bitcoin in circulation. So not the Bitcoin supply, but the amount of Bitcoin in circulation. And we know that majority of Bitcoin is already in circulation. And with Grayscale, if Grayscale continues to accumulate more, this 2.5% should probably grow, which is pretty crazy. Imagine owning 2.5% of the Bitcoin in circulation. I think it's, what is it, about 17 or 18 million Bitcoin in circulation now. I'm not sure the exact number. If any of you guys do know the exact number or want to look it up, put it in the comments below. This doesn't necessarily mean Grayscale is buying this Bitcoin directly. It can either purchase Bitcoin on behalf of clients, or it can issue shares in exchange for Bitcoin. But in the later case, it wouldn't be sucking up any of the available supply, and it wouldn't be affecting its price. The increase in Grayscale reserves comes amid a pullback in the price of Bitcoin. Earlier this month, the first cryptocurrency made another unsuccessful attempt to gain a foothold above 12K and has been trading mostly above 10,000 since then. While the Bitcoin fund constitutes the lion's share of Grayscale funds, the company now has around 5.8 billion worth of assets under its management in total, according to its latest report. So if we look at this, remember, they own 2.5% of the total Bitcoin in circulation, but Grayscale has more than just Bitcoin. As we can see here, they have Bitcoin Cash, Ethereum, ETH Classic, Horizon, Litecoin, Stellar Lumens, XRP, Zcash, and Grayscale's digital large cap fund. So they have quite a variety of trusts that their clients can invest into. So they're not just holding Bitcoin, which that's very interesting. A lot of people are Bitcoin maximalists, you could say, or, only believing in Bitcoin. Bitcoin is, the only digital currency. But, Grayscale, who's accumulating Bitcoin on a scale that, most of us can just never do, right? Unless we're an institution, or unless you, I don't know, you're a trust fund baby. I don't know who has the ability to buy 450,000 Bitcoin other than Grayscale or massive institutions. So the fact that they're buying that and other cryptocurrencies gives me the impression that Grayscale is bullish on crypto as a whole, right? You can kind of say a rising tide lifts all boats. If Bitcoin is going to be lifted off to $100,000, what is that going to do to Bcash, Ethereum, Litecoin, Stellar Lumens, XRP, Zcash, and all the other cryptocurrencies out there that have real projects behind them, right? Obviously, we're not talking about S coins. So Grayscale received over 217 million worth of digital asset trust investments in a single week after launching a TV ad campaign which didn't even mention Bitcoin. Do you guys remember that? Remember when people were so mad that Grayscale ad, They didn't mention what they wanted it to mention. It didn't come out how people liked. They said it was shitty, like they could have made it better. But check that out. They received over 217 million worth of digital asset trust investments. And again, that's because the ad was not meant for you. The ad was not meant for me. The ad was not meant for people already invested into crypto. What the ad was meant for was for getting new investors who do not yet have exposure to digital assets and getting that new money into cryptocurrency. And that ad worked. Obviously $217 million raised without even mentioning Bitcoin. Now imagine when they start running ads and they are mentioning Bitcoin, when they're mentioning Bitcoin Cash, Ethereum, XRP, Zcash, Stellar. It's going to get pretty interesting, guys. In early September, the firm also published a report for investors that suggested that today's market is reminiscent of early 2016, the period that preceded Bitcoin's historic bull run. So 2016 was mainly that, Bitcoin inching up, good accumulation. 2015 was probably some better accumulation, but 2015, 2016, Bitcoin inching up, accumulating right before that 2017/2018 blow off top. Now, if you guys like daily cryptocurrency videos like the one you're watching right now, go ahead, subscribe to the channel. It is free. You can also hit that notification bell after you subscribe and you'll be notified when we upload. Hopefully, I know YouTube sometimes does a bad job at notifying you guys. If you guys could also drop this video a like for me, that would be greatly, greatly appreciated, as likes do help with the YouTube algorithm and pushing this content out to more people who are interested in the cryptocurrency news. Our prices for today, we have Bitcoin sitting at 10,700. Ethereum at 355, XRP at 24 cents, Bcash at 226, Chainlink under $10, Cardano is at 10 cents. We have EOS at 258, Tron at 2.6 cents, Tezos at $2.22. We have a 7-cent Stellar, 7-cent Stellar, and we have a 1.2 cent VeChain. Theta is doing extremely well, with Theta at 75 cents, continuing to rally despite the rest of the market mainly moving just sideways, kind of accumulating. Theta has been doing some amazing things. Congratulations to everybody who has been holding Theta. Are any of you guys staking your Theta? Let me know in the comments below. Our crypto fear and greed index for today is at 45. Yesterday we were at 43. Last week we were in fear at 39, but now we are at 45. So let's move on to the Bitcoin difficulty ribbon chart. Hasn't been this bullish since March. And keep in mind, guys, this video is not financial advice. This video is just documenting the cryptocurrency news. So Bitcoin difficulty ribbon compression is broken out of a bear trend. It has been in since the March CV crash. Bitcoin simply needs history to repeat itself to see significant price rises, according to two indicators now flipping bullish. So what are those indicators? Let's go on. Glassnode hints at significant BTC price increases. Difficulty ribbon compression is based on difficulty ribbons, a metric devised by statistician, didn't even know that was a word. So statistician Willy, hopefully I'm saying that right, as a way to gauge optimal times to buy Bitcoin. Ribbons use simple moving averages values for mining difficulty, contracting as miners sell BTC to balance costs and then capitulate, often at the end of bear markets. This leaves strong miners and price recovery and then growth ensue. Compression adds standard deviation to the mixture, allowing analysts to quantify ribbon compression and to work out when to enter the market even more precisely. Difficulty ribbon compression is trending up and broke out of the green buy zone for the first time since March. Historically, these have been periods characterized by a positive momentum indicating significant Bitcoin price increases. And Willy agreed, adding that the difficulty ribbons were, quote, more reliable personal favorites. Among Bitcoin price metrics, he said that BTC investors should prepare for a great Q4 2020. So that is awesome to hear, guys. With the recent pullback and all the pretty much sideways and downward action we've been experiencing, it's pretty cool to see Willy say that Q4 of 2020 should be pretty great. I guess we'll see what happens. If we take a look at this chart, this is the Bitcoin difficulty ribbon compression. And what they're pointing out here, if you see this circle outlined in red, is that we have just pierced through basically this bottom. I guess you could call it a supply line. I'm not sure the exact term for it. But as you can see, every time we have dipped in here and then we spike out, we have a massive run up. So this right here was back in January. And you can see we were dipped in, but once we come out, it's a massive run. And then we dipped in. Once we pierce out, you can actually see we came out, touched it back, confirmed it as support, ran up, went back, ran up, underneath, ran up, underneath. Well, now we're just penetrating through. Now, the other thing that we can see is that we have consistently made higher lows, right? So we have our highest high, a higher low, a higher low, a higher low. Now, will we make another higher low, or will we come up to make a new local higher high? That would be very interesting. If we did, that could be very, very cool. We'll see what happens. Willy Woo says we're going to be expecting a great quarter for 2020, so we'll see what happens. It's Willy Woo. We'll see. All right. Another chart doing the rounds on cryptocurrency Twitter this week is the spot volume currency index from Bitwise, tracking periods in Bitcoin price history from lows to highs against the backdrop of halving cycles. The chart currently gives a strong indication of BTC USD heading upwards by an order of magnitude into 2021. By the end of next year, if historical behavior repeats itself, the market could trade closer to $150,000 than $10,000. So that's pretty cool, guys. So this is taking into account the time cycles, right? We have 4-year cycles. We have stock to flow. We'll see what happens. You know, I know there's a big, a lot of people say we're on 4-year cycles, and there's another handful of people who say that we're on lengthening cycles. Which one is real? We'll find out. I'm not really going to take any bets. If things look very toppy and it looks like the 4-year cycle is true, I'll probably be taking some profits around then. I think it's going to come down to a matter of, seeing how fast is Bitcoin or how slow is Bitcoin rising this time. What prices are we at around that 4-year cycle? Does the 4-year cycle still make sense at that time with in relation to the price of Bitcoin? These are all things that we need to see play out. I think the 4-year cycle theory, it could be very well valid. It very well could be valid. And I think lengthening cycle theory also very well could be valid. So I don't really have I wouldn't say an opinion, but I don't really have a decision on which is the correct one. I don't really care what the correct one is. I don't care if we're on 4-year cycles or lengthening cycles. The only thing I care about is getting an ROI on my capital, and whether we're on a 4-year cycle or whether we're on a lengthening cycle, ROI is still going to happen. And I will adapt and deviate or change or basically adapt my trading strategy, my investing strategy, as we see Bitcoin unfold and as we see whether or not we are in the 4-year cycle or whether or not we are in lengthening cycles. But I'm not emotionally attached to any outcome. I don't care which one it is. The only thing I care about is ROI on my money, as should you. I think it's really dumb to be getting tied up emotionally in we're in 4-year cycles, it's a 4-year cycle, stock to flow, or getting tied up emotionally in the opposite end of no, we're in lengthening cycles, it's going to be longer. It's like, who cares? We're here to make an ROI on our money, whether it's 4 years or lengthening. Who cares? We'll see what happens. 4 years would be cool because it gives us more time to continue making money off bull markets. Lengthening, you have the law of diminishing returns. It takes longer to get those returns, so you wouldn't be making as much money, but still you're going to be making a lot of money. But if Bitcoin was on a 4-year cycle, how long are those 4-year cycles realistically going to continue playing out? These are all things that we have no clue on. Always keep in mind that Bitcoin is a living, breathing, walking experiment, and we're basically just investors in for the ride in a highly speculative, extremely volatile asset class. With that said, that is the video for today, guys. So if you enjoyed it, make sure you subscribe, hit that bell so you're notified when we upload. And if you guys could please, if you haven't liked the video yet and you enjoyed it, a like goes a long way with helping to grow the channel and push this information out to more people. We need to get more average Joes invested into Bitcoin and cryptocurrencies before the bull run happens, because once the bull run happens and Bitcoin's at $60, $70, $80,000, they've already missed the entire bulk of their gains, right? You're going to make the most amount of money buying right now while Bitcoin is low, while cryptocurrency is low, while the new money hasn't come in yet. So with that said, hope you guys all have a great day, and I'll see you all on the next video.